Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve October 2022 University question paper of TYBMS 6 under the subject Innovative Financial Service. Again, in this paper, there are two problem sums very important that we are going to solve in this particular video. Okay, so let us see how to solve those particular sums. Okay, the first question was Measures Atlantic Company Limited with a turnover of 4.8 crore is expecting growth of 25% for the forthcoming year. The average credit period is 90 days. The past experience shows that the bad debt losses are 1.75% on sales. The company is administering a cost for collecting receivable is rupees 6 lakhs. It has decided to take factoring services of Pacific Factor on terms that factors will be receivable by charging 2% commission and 20% risk with recourse. This 20% risk with the recourse has nothing to do with the sum, it's just a dummy amount. The factor will pay advance on receivable to the firm at 16% interest per annum. Now this is per annum after withholding 10% as reserves. Okay, so factor reserves are 10%, interest is 16%, commission is so I'll just mark out stuff. This is the credit sale value plus 25% because it's going to increase 90 days credit. Bad debt is 1.75%, admin collecting cost is 6 lakhs, commission is 2%, interest is 16%, and factor reserve is 10%, and take 360 days to calculate the effective cost factor. First thing, 4.8 crore was a turnover and they're going to expect 25% increase. There's a growth to 4.8 crores plus 25%. So this is how we're going to solve this sum because now the sum has already been solved. I'll explain on how it has to be solved. Okay. Now expected turnover. Okay, 4.8 crore was already there plus 25% increase. So we add 25%, that is 1.2 crore extra. So my total turnover is 6 crores. Okay, now first we need to always find the funds available. So funds available के लिए we need receivable का value. So your debtors will take it as receivable. So 6 crores is a total value. 90 days debt is given. So into 90 divided by 360 because that's a total. We got 156 crores. So in lakhs it was 150 lakhs. Okay, that is nothing but 1.5 crores. From there, now withholding amount is 10%. This is nothing but your factor, your reserve. Okay, so this is nothing but my factor reserve. Okay, so 10% of 150 is 15. So when you less it, we got the value as 135. That's the first thing, the advance amount. Now from that we have to minus commission and interest. Okay, so commission was in the question 2%. So 2% of we'll have to take it on the receivable value. The 150 got 2% is 3. Okay, and now we minused it, we got the net payment. From this payment now we need to minus the interest. The interest is 16% for 90 days. Okay, we need to get it for 3 months because it's for credit period that is that 90 days ka. So 132, what was the net payment on this? We'll have to take 16%. So 132 into 6, 132 is nothing but 1 crore 32 lakhs. Okay, into 16% into 90 divided by 360 because we only wanted for 90 days. So we'll get the value as 5.28. Okay, so again when you subtract, you get your money available or funds made available. Once we finish that, we need to find the average cost. Okay, so we add up the commission, we add up the interest, and we less all the amounts expensive which we are going to save now. Okay, again the formulas have already been solved in the previous video, the very first part of the video based on factoring. Okay, so those who are getting confused from where these formulas are, it is all there in the very first video of factoring part 1. Okay, so commission was, now this commission 2%. Okay, we had taken this 2% that was on debtors. Now we need to find the total cost. So that will be on this total amount. Total sale was 6 crores. On 6 crores we'll take 2% commission, which comes to 12. Now, this interest was for 90 days, so we needed to find for 360 days. So we cross multiply. So 5.28 is for 90. So for 360 it is how much? So 5.28 into 360 divided by 90, we get it at 21.12. We added up, we got 33.12 in lakhs. From there, minus all the expenses which are not going to incur now. So that is the admin expense of 6 lakhs and bad debts. Now look at it, sir. They're giving you this bad debts is going to be 1.75% of sales. Okay, so sales of 6 crores. So 6 crores into 1.75%. Now this 20% risk, okay, which was I told you is a dummy. It only appears in this one place, that is in bad debts, and that also only if bad debts are given. So whatever percentage is there, okay, that percentage has to be removed out from your sales basically. So it will be 600 or 6,000 or 6 crore into 1.75% minus 20% you can do, or you can multiply it by 80%, any one of them. Okay, so those are like the credit, the cash thingy, those are risks. So we remove the risk out. So you can either take minus 20% or you can multiply it with 80%. Okay, so we did with that. So we got the saving value of bad debts as 8.4. We add both admin and the bad debts and we got the total value as 14.40. So once you minus from your total commission and interest, we got average cost cost factor as 18.72. Now effective cost killer formula was the factor the average cost or the factor cost what you got divided by the funds available. So 18.72 divided by 126.72 into 100, that will give you a final answer as 14.77%. Okay, so this is how you have to solve the sum based on factoring. So first you have to find the funds available, second the cost, okay, then cost upon the funds available into 100 will give you the effective cost of factoring. That was the first sum which was mentioned in the question in the paper. Now the second was based on hire purchase. Okay, Malendu Coffee Works bought a coffee drying machine costing 6,56,000 from Xavier on 1st Jan 22 and paid a higher purchase basis of 2 lakhs was paid on signing the contract, and the balance in 3 installment of 2 lakh each at the end of December every year. Interest are at 15%. Life of the machine is expected to be 4 years. Depreciation straight line. You are required to calculate interest paid during the hire purchase contract. So they will just want the calculation of interest paid. So our working will be calculation of interest. Particulars. You bought the machine on 1st Jan. So 1st Jan. And every December you are going to end. So December 22, December 23, December 24, because the installments are paid in 3 equal installments. So 1, 2 and 3. Format is opening balance, down payment or installment, interest, cash paid and closing balance. We start with the opening balance. The machine was bought for 6,56,000. So that's very first thing. Now on 1st Jan, you also made the down payment of 2 lakhs. So we noted on 2 lakhs. First, on the same date, the interest is never charged. So cash paid was 2 lakhs. So 6,56,000 minus 2 lakhs will give you 4,56,000. The last year closing will be the next year opening. The first installment was made of 2 lakhs. Okay. Interest charge. So 4,56,000 into 15% came as 68,400 as the interest for the first year. From down payment, from the installment, when you minus 68,400, you will get the balance of 131,600. And from opening, when you minus your cash paid, you will get your closing balance. Again, closing of last year will become next year opening. Second installment was again 2 lakhs. On 3,24,400, take 15%, you get the interest. Installment minus interest is your cash paid. And opening minus cash paid is your closing. Again, next year closing will become the next year opening on this. Now, last year, remember, whatever is the opening, the same amount has to be your cash paid, because opening minus cash will give you nil. You need the final answer to be nil. Okay. Thereafter, from your installment, when you minus the cash paid, you will get your balancing figure as 26,940 rupees. Okay, so this is how you all had to solve, do the working of calculation of interest, number 1. Second, they told you to pass the journal entry in the books of Malendu Coffee Work for the year 2022. Year 2022 is based on these two things, okay. So now remember, in the very first year, what has happened? First you purchased, then you did the down payment, then interest was charged, you made the first installment, there would have been depreciation because they've used it for 1 year. So again, so minimum 5 things are happened in that year. So see how you pass the journal entry for the very first year under hire purchase. First entry will always be your purchasing. So entry will be drying machine account debit to Xavier because you are purchasing the machinery. Value was 6,56,000. Number one. On the same date, there was a down payment made of 2 lakh. So Xavier to bank, 2 lakh being down payment made. Okay, so that was on the very first date. Now, at the last date of the year, interest was charged. Interest always remember it will be on the buy side, so it's always interest account debit to Xavier. The first interest was 68,400. So 68,400 on either side being interest charge. On the same date, you made a payment installment. Xavier to bank 2 lakh 2 lakh. Depreciation was charged. Okay, so entry is depreciation to your machinery. Okay, how to calculate the depreciation, because they just said use straight line method. Now you know the life of the machine was 4 years. So the working for depreciation was total value of your machine divided by the number of years. So we got 1,64,000, and which we have used it in our journal entry. Okay, so first you bought, you made the down payment, interest was charged, you made the installment, depreciation was charged, and last entry transferring to PNL. That is, you need to transfer your interest and your depreciation to the PNL account. So entry is PNL to interest to debt. You take both the values, you add up, and you get your PNL ka transfer amount. Okay. So this is how you all had to solve the sum based on. The only 2 things were asked in this. So we solved the interest part, and we also noted down the journal entry. Okay. So I hope you all have understood both the sums of 2022 question paper. Okay. So with that, we will be ending this video here. Thank you.